Welcome back to the channel, Crypto Trend Trader with a mid-week market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, just making sure everything is looking good on my end, and it is. So let's go ahead and get into it. I do want to talk about a couple fundamental things, and I want to talk a little bit about some confusion that I've been hearing lately. As far as like cryptocurrencies taking over the world, etc. And part of the argument that I've not heard anyone talk about, sort of against them completely taking over. But we'll get into that at a nice little breaking point. I do want to just start where we always start with the 10-year treasury. Once again, the 10-year is doing exactly what we've discussed. We did have like this channel that we were cruising up inside of, finally got the break, the measure move, and now we're just consolidating. Still, like we've been talking about, the most important thing that we're paying attention to is obviously, this white support line, the bottom of the channel is important, but more important are our Fibonacci retracement levels. So we're still looking for the 145 to hold, but more realistically looking for a move up to about 2 or 210. And that's, obviously like 2% on the treasury yield. So we do just expect it to essentially oscillate inside this range, but we would like to see the white support line continue to hold. So, which obviously, we could just literally go sideways right where we're at till May 19th. And we would just be tagging that line. So, sideways action is fine. The longer we consolidate above a key resistance here, that previous fib level, and all of the moving average, basically, like the longer term ones, the more likely we are to continue to the upside. So as far as I'm concerned, this just looks like a bullish consolidation, allowing our indicator oscillators to reset. You'll notice that we were completely, all the way up in the bullish control zone, completely at the top of the range throughout like this entire period, basically lighting it up red after red after red after red. And now here we are for the first time since we moved out of this bottoming pattern and, saw this divergence play out, that we're now getting finally the, bearish control zone or, in this case, like basically retesting the lower levels of the range. So once again, this to me looks like bullish consolidation. The indicator oscillators are cooling off while price action basically goes sideways, which typically leads to more continuation in the direction of that time frame's predominant trend, which overall, this is obviously to the downside as bonds have been in like a 40-year bull market. But, on the shorter term, at the time frame we're looking at, we're inside of this channel moving to the upside. So now let's just switch back over real quick and take a look at the dollar DXY currency index. I did notice one thing that I wanted to discuss here on the dollar. I took a little bit of time and just tried to like think outside of the box on this. Now this is still not looking bad to me or anything, but there's one thing as far as like the actual Elliott wave structure is. This is essentially consolidating below the top of this previous level for a little longer than I would like to see. Now, if we switch to the weekly time frame, what we don't want to see is this area, dip into the top of the one longer than essentially like a wick on a longer time frame. So, if we look at right now, the top of this range here, there's obviously a wick that continues up here from the previous weekly, but the top of this weekly is at 91.05. The candle close in green here. So we want to see this candle close this week above that same level, that 91.05. Now that's just to maintain that this is a 1, that was a 2 retracement, this is a 3, and then the 4 basically just taps, finds support at the top of the 1 based on like the weekly time frame. Now if we look at this on the daily time frame though, we've already jeopardized the range because we've like, closed higher on the daily, and then we've also closed lower here on the daily. So what I want to do is, this is not invalidated by any means yet, and we came down to the exact area that I was expecting us to come down to. So everything still looks good. But again, I want to look at it from both perspectives. What if we're right? Obviously, we have our measured move here to the 5 and where we would expect it to move to at like 95.5. But I want to also look at, what if I'm wrong? What if I was wrong on this? What if this is already done? What if instead of this being our 1, that being our 2, and then this being our 3, that being our 4, and then we're going to get a 5th wave higher? What if I was wrong this whole entire time? So what does that mean? That means potentially this was our 1, just like we were looking at, and then we had our 2, once again, same exact spot, and then this was our 3 right here, this was our 4, and now here is our 5. So what's the difference being? Well, the previous version, we still have a whole nother wave up, as where in this version, we would expect to retrace. In the previous version in white, we would expect to retrace only from wave 2 to wave 3 and then pull back down. In this version, the 1 is done, the 2 is done, the 3 is done, the 4 is done, the 5 is done. The entire structure is complete, and now we would expect to retrace from the bottom here at the 0 all the way up to the 5 here in blue. So all right, let's check our rules and see. Obviously what we just talked about, the 4 coming down only by like, a wick on a shorter time frame, like, so we're not invalidating the 1. So we have the top of the 1, the bottom of the 4 line up. So yeah, that's a possibility. But this doesn't look like as clean. It doesn't look as proportionate, the blue one. So let's check and see, does it violate our key rules? Which if we measure the distance of the 1, we have 2.377. If we measure from the bottom of the 2 to the top of the 3, we have 2.9, so it's longer than the 1. So the 3 is often the longest, but it's never the shortest. So that's obviously does not violate any rules. Now let's look at the 4 to the top of the 5 in this case, 2.13. So it's shorter than the 1, it's shorter than the 3, but it's not, there's no like invalidation or anything. So realistically, what if we were right in that case? We're going to use our blue Fibonacci that we have in place from the bottom right here up to the top, and then we would expect a pullback somewhere between, essentially the 382 and the 618, preferably down to the 0.5, in a bullish market between the 382 and the 0.5, or on like a heavy retracement between the 618 and potentially the 786. So we're basically just about at the 618. The 618 would take us down to 90.77. So everything looks good. It definitely looks like that's a possibility. Now let's check if we weren't wrong and the 2, like our initial 2 is going up to our 3 instead of, in this case, that was the entire 5-wave structure. So now that would give us in green here that we've pulled back already to the 618 and that we're basically above the 618 finding support. Now, is it possible we get a pushback down to the 786 on like just a wick? It's possible that we come down to like 90.5, but that would tell me that more than likely I was wrong. I was wrong about this, and then in all actuality, we're done. Like, we are basically retracing the 5 waves, and now we're going to continue to the downside. I was incorrect, and that's fine. So at this point in time, either one of those situations is possible, but now let's look at symmetry. This went up for basically like weeks here. It took like weeks to go up, and then a little less time to go back down and retrace. That's pretty common. This one was like much quicker up, and then a very short, like few days it took to basically reach its bottom, maybe a week going sideways, and then again rather short, and then we sold back off, and we've been like, proportionately to the wave 5 in this case, from the bottom of the 4 right here to the wave 5, we've actually been retracing for about an equal amount of time roughly. So again, either one is definitely a possibility, but based on like symmetry and everything, I'm still sticking with my initial thought that essentially this is our 1, that was our 2, this is our 3, that was our 4, and then we're going to get continuation on the 5. And again, looking at the weekly makes me even more confident in this situation. But again, we want to be careful, pay attention to the possibility that we are wrong and what that would mean for like overall markets. So if I was wrong, I would expect continuation and the break to the downside right here, with our red measure move, possibly even breaking back inside the channel, and then just continuing like weakness of the dollar in relation to the basket of currencies, primarily the euro. But again, I still look at it as, we have gotten now our retracement from the 3 back down to the 4. I would expect our weekly close to be above that 90.5 level basically, and then see our continuation to the upside. But again, I'm paying attention to it so that if I am wrong, I don't have to figure out all of a sudden, oh man, I'm wrong. Why was I wrong? And then all of a sudden, I'm caught with my pants down trying to figure out what the problem was, as opposed to just being already prepared, already have that situation and like invalidation points in mind. So that's what I'm paying attention to. And I think more than likely that, we're still right on track, but I did want to point that out as a possibility. So, what's going on, brother? Good to see you. Good to see you. BitConnect. Yeah, I feel like Doge is like the new BitConnect right now. That's funny. All right. So yeah, that's obviously typically how we get started every time. Let's get into our traditional markets first, just the indexes, and then we can kind of like jump around a little bit. We obviously saw quite a bit of strength coming into the markets today. That Wednesday hump day move. Does that change anything, or is this basically just like a reflex rally, an attempt to push prices back up to sell into? In my opinion, that's exactly what it was. It was a final attempt to push prices up and then sell into, get out of your positions before a continuation back to the downside. Does that mean we have to have a heavy pullback? No, but we're close to exiting the bullish control zone on SPY. We got the hard sell signal at the top of the range. We've gotten it here. We got it here. We basically got it here. And now here we're likely getting it again. Multiple red histograms halfway through the week. This is our daily chart. Push back up, potentially putting in a lower high. We flipped over the parabolic SAR back to red. So at this point in time, based on our short-term stuff that we could look at right here, the last time that happened, we had a 5-week parabolic SAR pullback. After that, we had, basically about 10 weeks here roughly. And then here we had about 4 weeks. So is it realistic to think that we're going to get like a 1 to 2 month, basically like consolidation sideways or pullback? Yeah, definitely. Is it also possible that we're completely topping out? 100%. Is it also possible that, we'll just take this out tomorrow and continue to the upside? Yes. But I think the most probable, most likely situation is going to be basically like a 4 to 8 week consolidation pattern, at which point in time, I think it's going to be like an internal consolidation. I think it's very unlikely that we would take out 385. I think it's also very unlikely that we would take out 417. So if either one of those two things happens, maybe I will change my view. But in all reality, I just expect this to kind of go sideways to down here and, essentially find support somewhere in like the 400 range. But we'll have to see. If momentum starts to shift over and we start to get like heavy selling coming in or whatever, that might change my mind. Also, if we switch over to our weekly, and let's keep in mind how that's looking, how that's developing. I'm going to turn off the actual drawing tools here, and let's just pay attention. Obviously we got a high here. Obviously now we have a higher high over here. Let's look at the indicator oscillators. Here we have a high. Here we have a much lower series of highs. So in all reality, what does that mean to us? Like, this high here, this little peak right here has come up to the same little peak right here, but it's still well below this one and well below this one. So does that mean that, because this peak came up and this one came up higher, that has to be divergence? No, we could be paying attention to the divergence between this point, and this little cluster as a single point right here. So in all reality, is it possible that we have bearish divergence going all the way back from December of 2019, and then bearish divergence from August of 2020, and then once again from this little like cluster inside the bullish control zone as like a single point? Do we have to look at right here? Do we have to look at right here? Do we have to look at right here? No, we can look at it like this, as this is not a point, that's not a point, that's not a point. This whole series is a point, and the peak was right around here in December of 2019. So as far as I'm concerned, we still have a very high likelihood for bearish divergence, triple bearish divergence on the weekly, dating back to basically like the end of 2019, which if you pay attention to what happened at the end of 2019, we got a massive sell-off. So, here we got a much shorter, like smaller sell-off off this period. This was obviously like, the market straight up like crashing, because of like obviously our black swan event and whatnot. So, which one is going to happen? If this is bearish divergence, are we just going to get a little sell-off like that? Or are we going to get a complete like market crash back down to like, maybe 300 this time instead of going back down to like 200? It's definitely a possibility, and we don't know for sure which one's going to play out, or none of them could play out. But we're definitely keeping that in mind, because there's some serious possibility that we could have triple bearish divergence playing out on the weekly. So definitely worth paying attention to. Again, I'm not, people are looking at one or the other. They're either looking at like the Dow Jones chart all of a sudden that I've been pulling up where it goes back 100 years, or they're looking at like daily or 4-hour chart saying we're going to the moon. No one's looking at like the in-between right now on, it seems like, any market. So speaking of the Dow Jones, same thing. We got a nice powerful pushback up. We got a bullish engulfing candle coming in. But again, we still did not take out the previous top here. We did not come down low enough to flip over the parabolic SAR, but we're obviously still inside the bullish control zone, getting the hard sell. I talked specifically about how these indicator oscillators need to cool off. So even if price action just goes sideways, we needed to have some kind of reset in the indicators oscillators because they were up near like 98, 99, 100%. So now let's look once again at the weekly and pay attention to what's going on here. Obviously we have a high right here, and then depending when you're looking at here we have a lower high right there, and then we have a higher high right here. So we're not getting the exact same signature as we're here. Back in 2019 we had a high, then we did in fact have a lower high, and now we have a higher high. So this one is not showing that same bearish divergence inside of the Dow. So again, on the weekly, looks slightly different. Not as bad, not as alarming, but typically like the indexes will move at least somewhat together. IXIC, this is the NASDAQ. Someone had asked me too, specifically about like the different NASDAQs, like between the NASDAQ 100 and the NASDAQ Composite. NASDAQ 100 only looks at the top 100 like tech stocks basically, as where the NASDAQ Composite has a heavy weight on the top 100. I think they make up like roughly, I should have looked and checked, I think it's about 90% of the index, but those top 100 make up 90%, and then like a bunch of other tech stocks inside of it make up the other 10%. So this one has a little bit more diversity. So that's why you might see, like, for instance, what was happening that I was specifically asked about is the NASDAQ Composite was not making a new high right here, as where like the NASDAQ 100 did make a new high. And that just means that the stronger stocks inside of this index are, slightly stronger enough to push it up to a new high on the recovery than we saw in like the bottom, like, 90% of the index, or the last 10% of the index, however you want to look at it. So again, there may be some slight divergences, some slight differences, but overall it does not change anything for me. You will actually notice that I specifically talked about in like a video, maybe my last one or the one before that, how you can actually get an A scenario like this, a B where you come up to a higher high, and then a C continuation like sell-off. So if you want to look at this as your more traditional, assuming I'm right, and this is topping out right here, we have a basically an A sell-off, a B to a slightly lower high, and then C continuation back down to either like, the same low, somewhere around there, or even a lower low, or what happened in the NASDAQ 100, where you actually get a slightly higher high right here, but that does not invalidate that this is an A, B, C corrective pattern before continuation to the upside. So once again, we are showing quite a bit of weakness. We're inside the bullish control zone. Looks like we're getting ready to see the cross. We get a powerful move up here, not to a new all-time high on today's move on this, but we did actually bounce like the parabolic SAR. So we could see continuation in either direction, but this does not change, my opinion. I still want to see us basically come back down to 13,250, find support, and then continuation to the upside. If we do not, I will consider basically this trend line here with the two touches at the bottom in blue to be invalidated, and expect more of a heavy correction, either to form like a double bottom or come back down to like a lower low on this, at which point in time I would expect us to bounce like the 200 exponential and simple moving average and see continuation. So but here we have like on the weekly, let's just kind of pay attention to what we're looking at once again. On the weekly, we had that same high back here. We had a second very clear high here in August 2020, and now here we have like a high here as well. So let's look at how that pans out here. We have a high right here on the indicator oscillator, then we have a lower high right here on the indicator oscillator, and now here we have a same high or higher than the middle high right here. So again, you could say there was some divergence taking place, but in all reality, it would have between these 2 points and then played out. This is convergence between the markets. So, not nearly as clear of a picture. Basically, looks okay to me overall in comparison to like something like, for instance, the SPY that has triple weekly bearish divergence. But again, we very clearly have lost strength here from that peak high right there, left the bullish control zone, got the hard sell, and then, we saw a slight pullback, but now here we are at the top of the range again. So does that mean we're just going to continue to the upside and that was the end of this consolidation period? Yeah, maybe. But for now, the histogram is still well below the slope line, starting to basically, it's not rolling over, But here we have like a decent slope on this coming up here, and now here we're basically like flat. So if this starts to roll back over, starts flipping red, and stays underneath this slope line long enough, I would expect a much heavier correction to the downside. So again, not quite ready to get like bearish completely on this stuff yet, but there's definitely some signs coming in. But obviously a big bullish engulfing candle, looks good overall after a little bit of like consolidation sell-off. Same thing on the Russell 2000. This index, once again, showing us similar signs here. Is this just cooling off and basically going sideways? Are we going to, potentially be putting in like a head and shoulder pattern? I mean, it's definitely a possibility. We have to wait and see how this plays out. It's starting to kind of get like that head and shoulders look to it a little bit. If you have like basically like your left shoulder coming up here, you have, depending on how you look at it, whether you're going by like wicks or, candle closes, but essentially you have a situation like this starting to take place. It's not beautiful. It's not pretty. It's definitely got like a little ugliness to it. But, when you kind of look at it like that, this was kind of choppy here. I normally like to see like more of a sustained sell-off, and then like more like structure and symmetry between it. But overall, I could definitely see, where this is sort of shaping up into like, sort of a little head and shoulders action going on here. Definitely need to be careful with this one because of the indexes that we looked at. I'm the least bullish or most bearish on this one. I could easily see it coming back down to like 1,829. But this isn't just going to crash on its own. I think it would correspond to another situation where like, smaller businesses are getting locked down. Now, this is not your mom and pop like Army Navy store down the block or like the guy who repairs lawnmowers down the street from you. This is still corporations that are publicly traded. It's just smaller corporations than like your Amazon, like Google type situations. So while I would still expect these to be weaker than like the powerhouse tech sector, like stocks or big time like companies, this is somewhere in between those and, mom and pop stores down the block. So, and then let's just kind of take a look once again at the weekly and see what this is kind of showing us. Definitely has some remnants of like a market looking like it's going to top out here, as now the 8 moving average is basically going sideways. Looks like it could easily, sell off and consolidate. We did get the hard sell. We did exit the bullish control zone. Last time that happened, that marked the bottom, and then we basically got continuation after it. But keep in mind, this is a weekly chart. So, the moves that we see happening on a situation like this, play out over a much longer period and, much more intense. The last time we got that hard sell back here was January 2020 when I was warning everybody, like, look, that crash is probably about to happen. We don't know how bad it's going to be. But at this point in time, there was a lot of stuff, telling us basically that the markets were going to actually crash. And that was only in the beginning, like remnants of, basically like talks of like the sickness and whatnot. So, but again, you see, obviously from that bearish control zone down here and like the hard buy signal, depending when you got into these markets, the amount of obviously like continuation in that direction was extreme. So are we going to see a situation like that play out again where this massively dumps? Or are we just going to see like a little short-term sell-off? We have to wait and see. Not seeing any like crazy, red flags on the weekly here, but definitely seeing like a little bit of weakness come into these markets, and enough to pay attention to the possibility that we are going to see, basically like a head and shoulders type situation come in, at least a retest, possibly down to like the 200. VGK, Vanguard. This is just a FTSE, just like easiest way to trade it in the United States. But, we spoke specifically about this red line and why that was so important. That's just like our previous couple tops. And then obviously the key level, this Fibonacci that we finally broke above here. We topped out exactly where I said, right at the red line. I've been pointing that out for a while now. Does that mean we're completely topped out and it's done now? No, but we very clearly topped up here and then got, basically like left a nice big gap. And, a pretty bearish like island reversal pattern up here where we left like a couple candles just sticking out by themselves. So are we going to come back up and just fill this gap? Are we going to come back up the rest of the way, fill this gap? Are we going to get continuation to the upside? Are we going to lose strength now and immediately start selling back off? And this was just an attempt to basically liquidate some positions. I don't know which one of those is going to happen, but this thing definitely looks like it could be potentially topping out. We're not seeing any like massive bearish divergence or anything. This overall still looks like is in an uptrend to me. I think this is basically, this corresponds with the strength, in the euro versus the dollar as well. So You know, these things often operate like either with each other or against each other, and we can see patterns developing, and we see divergence within those patterns within different markets or sectors. You know, we can get an accurate idea as to whether or not we're going to be right or wrong. So let's look at XLE, energy sector. All right, so what is this telling us right now? Obviously, we pretty much have invalidated the head and shoulders. You know, we were talking about that way back here, basically. I didn't think that looked symmetrical enough. But we're basically looking at now, more importantly, essentially just a descending triangle. Flat bottom right here, you know, and descending highs, you know, lower and lower highs as we go. We then broke down from our key support level, which, you know, obviously was important back here. Closed, moved down again, got the majority of our measure move, but did not complete the break, you know, of this, or obviously like, you know, the potential head and shoulders we were looking at before, which is this one. But now we just got to push back up. But where do we stop at? Well, we stopped right at our old support. So this was our support. We broke down from it. We moved back up, and now it's acting as resistance. So what we need to pay attention to is, you know, over the next couple of days, you know, potentially going into the weekend, do we see this move back up into the range? And this was just a fake breakdown and then potentially continuation to the upside? Do we see this move back up, get rejected again, and then start selling back off? Or do we see it just rejected now and start selling off? Well, again, I'm not sure which one's going to happen. But, you know, to me, overall, this looks like a break of a key support, a retest of that support acting as resistance, and then, you know, typically we'll see continuation in the direction of the predominant move, which in this case, you know, obviously it's overall in an uptrend, but we're in a consolidation like sideways or potentially like bearish pattern. So I would expect continuation to the downside. Obviously, if we can find support here once again and find continuation, then maybe the retracement's over. But for now, does not look particularly good to me, just because we saw one decent daily candle come in. The iShare Global Clean Energy ETF, you know, this one still looks absolutely horrible. There are a couple things to pay attention to now, though. We've had a, you know, consistent sell-off since the beginning of January. So, you know, basically this whole entire year so far, first quarter, this thing just like sold off and consolidated. It is obviously putting in like, you know, descending triangle or descending pattern. You know, we have a flat bottom support down here. You know, got to bounce off of that support here. But now let's pay attention. What is this signal right here? This is the signal I always talk about. You know, the hard sell followed by the buy, followed by the sell again. Typically happens at the top of a range, and it's a divergence signal. Or if you see the hard buy, hard sell, hard buy at the bottom of the range, it's a divergence signal, and then you usually see it move in that direction. So is this going to act the same way? You know, because it's sort of like the middle range, it's not as reliable. It's basically like at like the 50 level. So it's essentially like neutral. So it's less substantial to me than like this one, where we're inside of the bullish control zone. We see the hard sell followed by the buy, which is the absolute top, and then a sell after that, and then we leave the bullish control zone. This to me is much more of a divergence signal at the top of the range, the same way that, you know, a divergence signal at the bottom of the range would be bullish. But this is essentially to me like a neutral divergence signal. So in my opinion, this could go either way. More than likely though, it will continue to just chop sideways. But again, we're underneath our 821 moving average, basically finding less and less support on the 200 exponential and simple. I think the longer we hang out right here, the more likely we are to break to the downside. I'm not prepared to get bullish on this thing yet. I think there's a very high likelihood that we will get a good opportunity to buy this off of that $20 range and take advantage of our second trade setup right here. Can I be wrong? Sure. But, you know, it's not going to just happen all of a sudden. We got plenty of time to figure that out. So that is our, let's do tech next, and then we'll do crypto, because this just kind of corresponds. And then we'll get into our commodities as well. So I'm going to grab a drink really quick. Just 2 seconds, though. What's up, bubblies? Welcome. Good to see you, as always. Definitely one of the more consistent for these live streams. I can tell you're enjoying them. Definitely good to have you guys. Pathway, obviously good to see you as well. Tesla, you know, again, this doesn't change anything for me. We basically got the move exactly up to where I anticipated between the 618 and 786. I would expect more than likely continuation back to the downside. Could we easily bounce this uptrending support line right here? Yeah, I would take advantage of Tesla at like 660 for potential continuation to the upside. But as far as I'm concerned, you know, we basically just broke down from our resistance area, which was the 618 to 786, bounce back up to try to retest it, get above it for support. We have to see if we find support and continuation, that's perfectly fine. I would be bullish on Tesla again, at least short term, to see what happens, how this develops. But in the meantime, it just looks like we're potentially going to get rejected again and continue back down at least to that point, or maybe lower, because we did just exit the bullish control zone. We're now about to get a hard sell, on the stochastics. But we do have the histogram above the slope line, potentially getting ready to flip over blue. So still kind of up in the air on this one. But, I wouldn't be rushing in or out of any positions, in my opinion, at this point in time. I'm not ready to change anything. NEO, obviously Chinese stocks are still showing quite a bit of weakness. NEO got to push back up, try to test this key resistance line here in red. We obviously still have another one from like the actual absolute top right here. But, this thing has been selling off heavy the entire year, the whole first quarter, selling off real heavy. Does that mean that this trade setup's going to pull through and we're going to get that measure move up here? Does that mean we're going to get our move up to the 618? No. But, if we have a 50-50 chance of it succeeding, and we take a buy from this area with a 10% stop loss and a 33% reward, it's a 3-to-1 trade with a, 50-50 likelihood of playing out. So, yeah, it could sell off right here. Maybe we lose 10% or we take buys from a lower area. Is this still an overall bearish pattern? For sure. But again, we're getting less and less strength off the 200. So I'm still overall bearish on this. I think there's more than high likelihood we're going to break down from this key level. And then, we can pay attention to one of these other key trade setups and how they might play out in the future. I'm not overly excited about this just yet. This looks like, honestly, like a reaction rally. One final attempt to like break through a descending trend line before like essentially a measure move capitulation to the downside. Again, we're seeing buy, sell, buy. But, this is neutral in the range. We're seeing the, histogram above the slope, but it's not flipped over blue yet. So am I ready to get bullish on this thing? No, we're not even above the 21 yet. We haven't been able to get the 821 cross since $58. And now we're down, basically like over 33%. Since $60, we're at basically $40. So you still got plenty of time. If we see the 821 cross back to the upside, I'll be paying attention to this potential trade setup and to move back up at least to like the 618 at like $50, $51 even. But right now, still looks bearish to me. Keep in mind, this thing was $4 a little over a year ago and like bankrupt before like, basically Chinese government took a nice stake in it. So again, I'm overall bullish on NEO long term. I think they'll be one of the predominant, car manufacturers in China for like EV. They maybe be like the Tesla of China. Competing with obviously Tesla in China, but overall, not ready to just all of a sudden be bullish on this thing because one day move. Helion, I'll probably stop looking at this for a little while until the chart develops a little bit more. Once again, like I said, once we broke down from that key level and like the IPO on this thing, I mean, it could just as easily go dead or sideways forever before it ever gets any kind of like measure move or like bullish move. But, if it starts getting back above that key level of like 950 or whatever, above that, like maybe I'll take another position in this thing or take a position in this thing like with some anticipation of upside. But right now, it doesn't look great. Baba, basically did exactly what I said. It literally did exactly what I said. We got that push up here with the resolution, of basically like the fine, the $2.4 billion or whatever. But now it's been just selling off since then. Came down exactly and filled that gap today. Turned into like a wick and a slightly bullish candle. But after all this downside potential, is this little bullish candle right here? Is this little guy, making me like bullish to where I'm like, let's do it. It's good. We're going now. No, not at all. Stokes are angled to the downside. At least the blue is. Multiple red histograms in a row. We are above the slope line. Still red. We're in the bottom of basically this massive descending triangle or downward, trend line sell-off. We need to get back above this green line right here, this green support line that goes back for months. If we don't get back above that, it's impossible for me to be bullish in this market. I think more than likely this is looking like we basically broke down from a key support level, gapped up and tried to save it, sold back down below it, and this is going to act as resistance. And then we'll probably get that massive sell-off back down to somewhere around like this was a measure move back down to 165. How do I look at that? I look at it as a buying opportunity. To me, this looks like a 5-wave structure that has already played out, and it looks like this is, that previous top back here in 2018 was the top of the 1, bottom of the 2. and then this is our top of the 3. We're going to now retrace the entire wave 3 of this 5-wave structure, at which point in time I would expect us to go, slightly lower to, I mean, we could come down. Maybe we already bottomed right here, and we're going to move up on the 5. Maybe we make it down to like $200 or even as low as 165. But I'm looking at this entire range as a buying opportunity. When I start to see strength come in right here, off either like the 618, potentially the 786, but more realistically, if we just get down to like the 0.5 right here, I'm looking at this as a buying opportunity. I'm massively bullish on Alibaba long term. The fact that they got like that stuff resolved with the government, looks bullish to me. And, we'll have to see how it plays out, what the fundamentals, technicals, whatever, everything tells us. But Zoom next. This thing has been just going sideways at the bottom of the range. I think more than likely we're going to see this sell off back down to the bottom of the range. Again, I'm massively bullish on this overall. I don't think the reopening trade just means that Zoom is going to die and people are going to stop using it. Not at all. I think more than likely we'll see other competitors come into the space and try to capture, some of this market cap. But I think this is going to be like an ever-growing market cap. And, Zoom is like the number 1 inside of it. Now, this thing had a massively parabolic move. So a sell back off lower, definitely could result in a better buying opportunity. But overall, massively bullish on this thing. Just not right now. Not while we're underneath the 200 exponential moving average and 200 simple moving average. Not while we're at the middle of, this descending channel. Not while we have, there's too many things pointing us to further downside than there is pointing us to further upside, at least short term. Medium to long term, look at this, a 5-year, 10-year horizon, definitely bullish on it. Anything, I think, any opportunity I have to buy, around now, looking at 5 to 10 years from now, I think this looks great. But could anything in the meantime, in that long horizon, like come in and dethrone this? Could anything happen? Could we easily see like continued downside? For sure. I mean, we could definitely see a move back down to the range, a lower low, and, potentially test like the 377 right here, at $267, or even come down to like the 0.5 of this entire move, $189, 618, $145. Yeah, but I'm going to look at those as buying opportunities. But again, I'm not looking to take positions off of like a neutral range, while we're below the 200 exponential and simple moving average. We get back above those, we start bursting back to the upside, we start doing what gold is potentially going to do here, then maybe. PayPal next. This thing, once again, came up, topped out exactly where you said, 618. We put in a very clear, channel, looking like, ascending channel. We're at like the heart line of the channel. We're below the 8, above the 21, at the heart line. I still expect this thing to come back down, touch the bottom of the channel again. We're getting a hard sell. We're coming out of the bullish control zone. I mean, are we going to see a massive sell-off like this? Probably not. But, if we break down from this channel that we're now forming to the upside, I'll be extremely skeptical on this. But in the meantime, I'm going to look at something like this as a buying opportunity. If we come back down here to the bottom of the channel, I'm looking to take a move back up to potentially like the 786 or something like that. So again, just how it popped up on here, let's say we have something like this, a 6.887%, stop loss. If we close below that previous high right here, it's going to look like a high. And then we got like, a low right here, and then a high right here, and then potentially like a low down here. Maybe we want to have, something closer to like a 10% stop loss to the downside, 15% to the upside. There's not a lot of potential for me. Now, if you want to take a position off of this trend line, assuming it's going to bounce back to the top, keep a rather tight stop loss and look at something more like this previous inside of high, low, high, higher low, higher high, higher low. And then if we take out this one, you want to get out of your position, and then you potentially have 15 to the upside. That looks much more realistic to me. We could take a 2-to-1 risk-reward ratio off the bottom of the range of this holding and getting continuation to the top of the range, at which point in time I would still potentially call this a high, a low, a lower high, and then potentially like lower low. PayPal still looks like it has continued downside to me, but could easily find support at this bottom level. There's definitely a trade to be had, a little 2-to-1, but overall, it's not amazing. Not everything's lining up to where I would want to take a trade. I still think the Apple trade has already played out. I took profits along the way. I'm done with this one. If it comes back down here and takes out our previous fib level, it's going to take me out of the remaining position as it flips over the parabolic SAR back to the downside. We're at the top of the bullish control zone, losing strength. We got a nice little push up here to another lower high. I mean, this thing still looks done to me. I'm overall bullish on Apple. Years from now, maybe even months from now, decades from now, definitely looks good. I like Apple. I've liked Apple since the iPhone 1. But right now, I think there's more than likely going to be, move back to the downside, or at least some more move to the downside, at which point in time we could take a better position. Maybe even that same trade again as we get like another in the series of like higher lows. But right now, I don't see anything. If anything, I'd be looking for like a short hedge off the top of the range for a continuation. So, but this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Pinterest, told you at this candle, it looked like crap. And it looked like we were getting rejected at the 886, and it was time to get out of that position. We took our previous position back here, gapped up. It played out perfectly. That was 21% move to the upside and never even came down close to our sell, at which point in time I told you when it comes back down here to the bottom of the range, this ascending, broadening wedge, there's likelihood we could essentially get that same trade again, maybe even back to a new high, and that would be an ideal buying opportunity. But I wanted to see if there was going to be strength at the bottom of the range or weakness. I'd rather wait another day or a couple days and see, I could buy slightly higher here, get that same trade again and continuation, at which point in time I would expect this thing to move back up and all-time highs. But right now, we have a situation like this. We got the hard sell, left the bullish control zone, and then we got a massive bullish engulfing candle back up here, and then saw a continuation to the downside. This is obviously a puny little, bull candle right here at the bottom of the range. Is that just a reaction rally? Are we going to see a big burst back up here and then continuation to the downside? I think there's definitely a high likelihood that this thing has basically topped out, at least for now, and we're going to come back down to a new low. So I'm not exactly looking to like rush back into this trade right now. We could easily see a move back up to like $77, but again, that's not going to make me bullish. I'd rather wait and see on this one. I think there's going to be continuation to the downside before continuation to the upside. Bumble, all right, so it did exactly what I said. I was expecting a breakdown from this key support level. It broke down from the key support level, came back up, retested the key support as resistance now. If you see all these different markets, all these different assets are looking the same way. We have a bunch of different assets forming essentially like downward channels or descending triangles or, whatever. And then they're breaking down from them, and now they're attempting to retest that breakdown support, and it's acting as resistance. So could this once again come back inside the range, move back up, and could we see Bumble back as high as like 64, 65, 66 bucks? Probably 64 realistically. Yeah, sure. But do we just break down from a key support and looks more than likely like this is testing it, finding resistance, and we're going to now like capitulate, and see like the measure move play out? I mean, that's what it looks like to me. This looks like a final attempt to unload your position before the measure moved down to 38.75. So, but again, all this stuff looks very similar to me, and a lot of charts right now are showing a lot of weakness. SMH semiconductor ETF, again, this thing looks good. I was expecting support, found support once again at the same area, got a massively bullish engulfing candle, didn't quite get above the 8. Could we see this one play out like the other ones I was talking about where it gets rejected in continuation? Yeah, but I'd rather see it if it's going to break down from, this upward little trend it's forming. I would look at that way as like a double top. But right now, this is fundamentally and technically much stronger than just about anything else we've looked at. Bullish control zone, hard sell signal, exiting the bullish control zone, multiple red histograms, losing slope right here. Could this thing sell off and that's it? Yeah, definitely. If it does, I will definitely get bearish on this, at least in the short term. But right now, still massively bullish on semiconductors, at least the ETFs. I'd be very careful about specifically which companies you're in right now. As, in my opinion, Taiwan Semiconductors fundamentally looks sketchy right now just because of all the conflict going on over there in Asia right now. So Walmart, it's still doing what I said. We've been in this descending, broadening wedge, okay? We're still looking to fill this gap up here. When we come up and fill the gap at like 144, I'm looking to short. But is there potential that this thing comes up here, fills the gap, comes back down, and then I can take that long position? Definitely. Definitely. But I'd rather be in a short from the top of the range on a gap fill and a long from the support after a break, consolidation, and then see continuation. I'd rather buy, a retest of support and sell a retest of resistance than I would, buying at the top of the range after a quote unquote confirmed breakout. Because in all reality, this is where you should buy. This is exactly what we're talking about. The key level to buy on Walmart is down here at the bottom at like key Fibonacci levels or support blue line right here. But key area to sell to me is selling into like the resistance. Now Walmart previously got like a break, but then it got a massive gap down since then. So if we come back up here, fill this gap right here, am I just all of a sudden going to be bullish? No, I'm going to be bearish that was just a gap fill. And then we're going to see like, another gap back down inside of this range and then continuation. Watch that happen too and pay attention. If all of a sudden we push up here and everybody gets bullish on this breakout for the measure move to the upside, and then all of a sudden it gaps back down and does the exact same thing it did right here inside the range, expect it to come back down to a new low and expect this massive, 18% sell-off to take place. Again, I'm very bullish on Walmart overall, bullish on the website. People love Walmart because it's hilarious, but right now, not looking to take longs or shorts. I'm looking to see price action develop. So, ARCs all still look like crap. Cathie Wood, you had a good run, darling, but right now looking bad. Saw a pushback up to resistance. ARCF saw a pushback up to resistance. ARCG pushback up to resistance. ARCW pushback up to resistance. None of them got even close to reaching, our goal for like basically a decent retracement. They all just basically sold off, went sideways, and I would expect them to go lower. So, there's a good possibility that Cathie Wood's going to be working on the street here before long when the fund collapses. Because if money keeps flowing out of it, she's going to be in big trouble. And I'm not talking about the street, the TV show. So I'm going to take a quick break, get a drink, interact with chat, and then we can keep moving on here. Take a look at crypto and what's going on. And look, I'm going to be real with you guys. As far as Bitcoin and crypto are looking, I warned you about it a while ago, and it's all coming true, exactly what I said. And it's looking worse by the day. So we'll have to see how it plays out. I'm going to grab a drink, and then we'll continue on. Just give me about 1 minute. Actually, that's all I need. My coffee's cooled down quite a bit. So, Bitcoin on the daily. Looking at the Coinbase chart. Very clearly here, we got the 821 cross to the downside, bearish. Last time that happened, we got one right here, consolidated below it, and then got continuation. Previous time, we saved it. Here, we barely saved it. Here, we barely saved it. And now here, we've got the confirmed cross. I was calling out this topping signal, the divergence signal on the daily, sell, followed by a buy, enter the bullish control zone, followed by a hard sell. The knife is all the way at the bottom of the range. I would expect us to attempt to recross this back to the upside. We saw almost no attempt right here. We had quite a bit of buying come in and leave these wicks behind, and then all of a sudden a massive bearish engulfing candle today. Looks like crap, man. This is how markets top. They get less and less of a move to the upside. Basically consolidate at the top of the range while there's more selling taking place than buying. We have triple bearish divergence, triple bearish divergence. We can look at a couple other, this is still Bitcoin here. We have, once again on the daily, triple bearish divergence taking place, triple bearish divergence taking place. Come on, guys. You can't act like I didn't tell you, 64,000 was at least a temporary top. Now, if we look at what's going on with the waddah explosion, saw quite a bit of selling come in right here. Then a tiny little burst back to the upside. Almost no volume coming in. Then once again, selling coming in. Burst back to the upside. New all-time high on almost nothing. And then more selling coming in. We're seeing basically all the volume coming in since January has been descending. Less and less volume coming in on this. So what does that mean? It means that if we see a big volume spike in one direction to the other, either a big buying amount of volume and price moves back to the upside, or a big selling amount of volume and price continues to the downside, maybe we're at the top. But as far as I'm concerned, when the volume is getting less and less and less, the trend, it's impossible to continue. So to me, looks more likely we're going to get like some kind of bearish action. Now, I would like to see us push back up and attempt to at least save this trend. But, maybe it's not going to happen. Statistically, it's more than likely going to happen. Now, this is what's really telling me the difference is between futures and spot markets. Futures, that head and shoulder that played out back here, that I very clearly identified September last year, that we rode down on that last short. And then after that, we've been bullish. 821 cross to the upside the entire time. Never cross here, never cross here, never cross here, never cross here, never crossed here. All those other crosses happened over the weekend or because of like weakness in spot markets in relation. So here we are now. We have very clearly closed and gotten the 821 cross to the downside. So, you know, did we come back up and fill that gap? Nope. We left it wide open. Left a wide open gap back here at 61,775. We have now closed that old gap that we have left right here previously. We still have another gap. No, actually that gap got closed. So now our gaps are like way back, super low. You know, our next gap to the downside is like that one at 24,000, and then we still have one at 18,000. Do I think we're going to fill those? Not anytime soon, but if this thing tops out, I bet we do. You know, now everybody's calling for potential 50%, 60% crash. All of a sudden, everybody's bearish. Why were those same people so bullish at 65,000 and now they're bearish at 54,000? It's the same people that are always late to the party on every call. They're bearish once it's going down. They're bullish once it's going up. So what's more than likely going to happen? Well, we just had a big-ass move to the downside. We're more than likely going to find support somewhere and attempt to move back to the upside and save this trend. So am I saying I want to get bullish right now? No. But am I saying it's time to like sell everything and sit back? No, not at all. The time to sell and sit back was up here at 64,000 when we very clearly were topping out with massive amount of triple bearish divergence on every single time frame, on like every single chart. You know, not every single time frame, but if we look at the weekly, once again, bearish divergence was taking place on the weekly between like multiple points here. Same with our spot market, not just on, you know, futures charts. So, but this to me is, well, I look for patterns. I look for technical reasons why we would potentially be topping out or getting continuation. And if this is the first time we saw a cross between the 8 and 21 to the downside since September, you know, throughout this entire bull run, this is our first confirmed cross to the downside on, you know, futures markets. That to me is potential like red flag going off. We could potentially be actually topping out, at least short term. Doesn't mean the bull run has to be over, but it does mean like, you know, potential to come back down and, in my opinion, do what we've been talking about for months now. Potential to come down here and retest our 21 for the first time since this entire trend took place. You know, we basically came down, touched the 21. We didn't even quite touch it back here. We finally touched it back here on that head and shoulders sell-off at 10,000. Haven't touched it since. Haven't even closed the weekly below the 8. So what could happen in the next 2 days, we'll have to see. But if we close below the 8 for the first time, you know, since basically 10,000, I think then we could pretty well confirm that we're coming back down here to 44,575 on futures. And realistically, we'll probably have a wick at least that comes down to like 40,000, maybe even high 30s. But, you know, this is looking like we're about to get our retest of the 21, and then we can see what happens from that. We've been in the bullish control zone. We've had massive amounts of green to the upside. Now we're showing more and more red. We're starting to lose strength. We're about to get a hard sell. We'll have the sell, the buy, and then potentially the sell again. You know, bearish divergence, oscillator on the weekly at the top of a range after a parabolic uptrend. I mean, I don't know how much people need before they're like, all right, maybe we're going to sell off a little bit. Once again, if we look back at the weekly, you know, we topped out our volume at this peak right here. Very clearly have had just descending volume since then. We got a bunch of hard sells still inside of the bullish control zone. Now we're potentially looking to lose that. RSI showing divergence, trending down. You know, Stoch slope showing divergence between these points, trending down. You know, obviously bearish divergence on the weekly, bearish divergence on the weekly. You know, no volume coming in, descending volume this whole way up here. You know, first red. It's our first red volume bar that we had since September 2020. Where was that at? That was after the head and shoulders played out back here. You know, so all of a sudden we have a bunch of things that are happening for the first time in months. The first time since, you know, $50,000 move to the upside. So now we have lost the slope, like I talked about specifically before it even happened. We lost the slope now on the waddah explosion. It's now yellow. We're now getting red bars coming in. This red bar is bigger than the previous week's green bar, and the week's not even over yet. So what we need to pay attention to is our next bar going to come in red again and get bigger and bigger and bigger? Because that's going to start showing us this is trending now to the downside. So as the moving averages are still like holding up price on some of this stuff, we have to be careful because some of our indicator oscillators are very clearly telling us, hang on, we might be, probably, most likely, are topping out. So again, not ready to get like completely bearish on this asset, but there's definitely some signs happening for the first time in months since, a 5x move to the upside on Bitcoin. Ethereum sold off, found support, coming back up, putting in a potentially lower high, seeing some strength come in on today after like an indecision candle. I still think that Ethereum's going lower. I was expecting it to get slightly higher though. So could we get up here and get our measure move and get that move back up to like 2,700 that we were expecting? For sure. But are we just going to put in more divergence? Yeah, probably. Got the hard sell, left the bullish control zone. Last time that happened, got the hard sell, left the bullish control zone. We got a massive sell off. Here we printed that divergence signal, the sell, the buy, the sell, in the bullish control zone at the top of the range. That was obviously the top. After that, we saw a big sell-off. Depending on what exchange you look at, it was bigger on like Kraken. Got to be real careful with this one. Do I think Ethereum goes to 26 or 2,700 before it gets a sell-off? There's definitely a possibility. Do I think it goes to 10,000? No. Doggy Dogecoin. Obviously, talked about this ahead of time. Everybody should have been in the move from 8 cents to 36 to almost 50 cents, whatever. But am I buying it now? No, I'm going to wait and see how it plays out here for a little bit. Once again, we have a very clear support line here. We'll have to see how it plays out. So I'm not overall bullish on Doge or bearish on Doge, but really got to see how this pattern plays out and what the potential is, because we did put in a new all-time high right here, while a lot of other stuff is selling off, but we're below the 8 and 21, across the downside, finding support on essentially what was resistance, support. But if we break down from this again, we could see a massive sell-off on this. I don't even know why I'm on the 4 hour. Not intentional. But if we look back at the daily, once again, we have a couple days worth of price action and decent amount of volume coming in. But this thing is real scary to me because we're seeing a lot of very few wallets hold the majority of the Doge. So when this thing sells off, it's going to just spike straight back down. We're getting the hard sell at the top of the range, multiple red histograms in a row. This looks scary to me. If we get a nice consolidation sideways like this, reset some of the indicator oscillators, maybe we get up to that $1. But right now, there's way too much downside risk for very little upside reward. So just one sec. I'm going to take a quick break and clear my throat and everything. Bubblies, just in relation to your question about the difference between futures, the main difference is that spot is open 24 hours and futures closes on the weekends. So when you see the charts and they don't look exactly the same, if futures was open all the time like spot is, they would probably look much closer together but not identical. But essentially it's just like contracts versus just buying like actual Bitcoin or part of a Bitcoin. But But in all reality, the main difference, why you see differences in the charts, is because Bitcoin is open on the weekends. So, you know, if you can trade Bitcoin 24/7 all weekend long and futures markets are closed, whatever happens over the weekend is going to influence how like the indicator oscillators move, as where like, you know, when price opens back up on Monday, you know, a lot of times what you'll see happen with futures is futures will close at say like 50,000, and then over the weekend Bitcoin might run up to 60,000, but then by the time futures opens back up, it's back at 60,000. So it does nothing at all to change what the futures indicators and oscillators look like, or the actual futures chart. But meanwhile, actual price action like in the spot market has affected how those indicators and oscillators use, like, you know, most of them use averages or momentum. So if there's like a big move, it's going to skew the chart like in one direction or the other. So like if you make a, you know, new high on futures but don't make a new high on spot, or you make a new high on spot over the weekend while futures is closed, you could have completely different situation where like one is showing divergence and the other is not. And that's why I said futures had already put in a third drive of bearish divergence, as where Bitcoin had not on spot markets. So that's why I said last weekend when Bitcoin, you know, when once futures closed, I expected Bitcoin to run up to a new all-time high, and then from then I expected it to sell off, because then the two charts would look more similar and we would have three drives of bearish divergence, which now we did. And you know what's happened obviously since then. So now chain link on the daily, hopefully that answers your question. We hit our measure move, specifically talked about that. I told you about this trade that I was taking way back when. Actually, I think I missed my entry on this trade or didn't enter that trade, but you know, obviously the setups were there. You know, if you saw the same thing I did or whatever, but you know, I'm in chain link from way lower. So if I miss a little trade along the way for a little money, that's not a big deal. We are still holding above support. You know, this is just going to do what everything else does. We got the hard sell, top of the range. We're above support. If we break down from support, we see continuation, weakness in these markets. I would expect to go down. I expect everything to go down if Bitcoin goes down. So Polkadot, same thing. Broke down from key support. This looks more bearish. Definitely is selling off. I think I was looking at these charts on the 4-hour, and that's why they're on shorter time frame. You know, but we have basically, this looks weak. This looks weaker than most other things do. It broke down from that key support level. It's back inside this range. You know, if we take out this low back here at 29, if we take out $29, I think this goes much lower. I think it's going to be back down to 18 to 20 bucks. Looks weak. And I think a couple of these like Uniswap, Polkadot, definitely Doge, have gotten like super inflated with like the FOMO trade. So Uni looks much stronger. Found support basically back at that level. We saw a couple like strong wicks come in. This thing comes back up. Maybe it puts in a new high. You know, maybe it puts in a slightly lower high. I don't know exactly what's going to happen, but I'm not overly bullish on this thing quite yet. Although it did put in some nice bottoming looking stuff. You know, it still has the hard sell, leaving, you know, basically didn't even get up to the bullish control zone. So basic attention token, weak, looks weak. Below the 200 exponential and simple. Looks like it's ready to roll over. This was strong the whole way up here. Oh, again on the 4-hour, my bad. This was strong the whole way up here, and for the first time yet, it's showing that 821 cross. So, you know, nothing, I can't say nothing. Very few other cryptos did not cross the 821 back to the downside along this move. So since like 20 cents, 22 cents, 25 cents even, when I was saying this is a hard buy, you know, now it's looking to me like potential of a hard sell. Could we come back up here and retest this again? Could we break back to the upside and save the trend? Yeah, it's possible. But just like futures, this is the first time we're seeing that cross to the downside. So it's much more reliable, as where Bitcoin had like a cross, or like an almost cross and saved it a bunch of times. This is the first time we're seeing the actual hard cross. So to me, it's much more reliable because we haven't seen that signature. We just lost the slope. We have a bunch of red histograms in a row. Again, we could see a relief rally off this region, but you know, I think this thing's more than likely it's going to be range bound, in my opinion, between $1.10 and $1.30 roughly. So we're right smack in the middle of the range. I'm looking to sell the higher end of the range and buy the bottom end of the range. But in all reality, we're looking at a potential trend reversal on all these markets. Dangerous place to be in. Riot still looks like crap. Broke down from that key support level. Got a bullish engulfing candle. Everybody's like, Riot, get back into it. It's on. Well, what happened? We broke down from a key support level, pushed back inside that key support level. Could we get continuation back up to 50 bucks? Sure. Is that a 20% move? Yeah, that's awesome. But is it a 20% move followed by more downside? Yeah, probably. And with the weakness we're seeing from Bitcoin and cryptos in general, I would expect mining stocks to sell off exponentially. I think that the reason this thing looks so weak compared to Bitcoin is there was a massive premium on this because everybody said miners are the place to be, just like gold and silver miners. Everything in the crypto space is modeled off of the gold space, but everybody in crypto hates gold. It's so funny. It's like, I love crypto. I love crypto miners. Crypto's the future because it's the new gold. Why is everybody so worried about the new gold but doesn't want the old gold? That makes no sense to me. If you literally had something awesome that was successful for thousands of years and then you built something else that was like a copy of it, but it did it slightly differently, why wouldn't you be bullish on both? The new gold and the old gold. It makes no sense to me. People are just in these weird cults. MicroStrategy still looks absolutely horrendous. Probably one of the worst things in existence. Sold down horribly. Slightly showed a little more strength than ARK. So I guess you could say, people like Michael Saylor and his cult slightly more than Cathie Wood and her cult. But in all reality, this thing looks like it's just going to head down lower. It didn't even get like a big pushback up here. And then on top of that, got another hard sell, from the middle of the range. This looks like it was basically just, basically like the indicator oscillator was oversold back through here. We saw basically bears were in control. This thing was dying. It was down, from 1300 down to 540. Like, there's only so many people selling this thing before it starts to get like a little bounce. This is just a pathetic dead cat sideways bounce. I expect this thing to continue getting crushed. And what's really going to be crazy is we're going to see Michael Saylor and his pillow hands if all of a sudden this stuff starts selling off. Because if his stock starts crashing, if it breaks down from this range up here, old Michael Pillowhand Saylor, his mom's going to be driving him back around again because his stock's going to go down. This thing's going to go down to like $340. It's going to capitulate back down to that previous support level right here. If it loses the level it's at right now, and I'll tell you what, if I'm not mistaken, based on Michael Saylor's like most recent comments, his average price now for picking up Bitcoin for MicroStrategy is like a little over 28,000. So at 64,000 or whatever, at 60,000, at 56,000, it was still good because he still doubled up on his overall position. But if this thing starts selling back off and we see 40,000 or lower, it's going to start looking dangerous. And at some point in time, maybe old Mikey's going to have to start de-risking, and we'll have to see. Maybe I'm wrong, but I'm gonna tell you right now, if you're in a position and at 10,000 to 60,000, he was up 6x on his position. And he looks like a genius, borrowing a bunch more money and buying in more as it's like 3x, 5x, 6x, etc. But if you start going back down to like, well, now we're only up 50%, then we're only up 25%, now we're even, now we're down. What's gonna happen then? I mean, look, I don't know, but I'm gonna tell you right now, even if Michael Saylor has diamond hands and he's holding all his stock down from 1,300 to whatever, let's say potentially 350, or he's holding his Bitcoin back from 28,000, or God forbid he was buying more up in here and his dollar cost average even higher, and then all of a sudden we're back down at 30,000 break even, 20,000, 18,000. I mean, who knows? Who knows? I honestly cannot tell you what's going to happen, but I'm going to tell you right now, even if he has diamond hands, everybody that bought into this stuff does not. Which brings us next to Coinbase. Coinbase has done exactly what I said this entire time. We IPO'd way too high, got a burst to the upside. Everybody's in underwater. Everybody that bought into this in the publicly traded markets underwater. Why is there so much selling taking place? Well, in order for this much selling to take place, this is all people that bought Coinbase OTC or were early investors in Coinbase. So why are all these people selling everything? Well, there's no lockup period, so they're not required not to sell anything. There's no, normally there's like some sort of like lockup where you can only sell so much, so often, etc., to keep this from happening. But this is often what happens with an asset that gets absolutely wrecked. It basically IPOs at a high and then continually sells back off. This thing is looking more and more likely like it's going to hit my targets. I know it sounds crazy when everybody's like massively bullish on Coinbase. What did I say? Coinbase IPO is probably going to be the top of the market. And so far I'm right, because Coinbase has only sold off. Bitcoin has only sold off. So was this like the big push, the big like final, FOMO move before like a massive sell-off or at least like consolidation period? Sure looks like it right now. I mean, is it gonna, what did I say? I said I think we're gonna end up back down at like $280 to $250. So 280 to 250, I still think a key Fibonacci extension target to the downside on Coinbase. We're hanging on right now, but this thing is hanging on for dear life. I expect more people are gonna sell into this, and the lower it goes, the lower it's gonna go. We could honestly see if Coinbase breaks down from the key support levels it's at right now, which it's barely hanging on to. It saw like nothing today when everything else, the entire stock market moved up today, and this saw nothing. I mean, I'm still on a super short time frame just because there's like no price history. But even if we switch over to like the hourly, this is a new all-time low on hourly closes. So we're literally closing a new low. If we go to the 4-hour, closing a new low with a bearish engulfing candle in place. And then obviously, if we go to the daily, we're closing a new low. So everything on Coinbase is extremely, extremely bearish right now. On the weekly, these are just giant red candles. I mean, poor Kathy is getting desperate now because she's like, I'm spending all this money on Coinbase. I'm buying this, I'm buying that, I'm selling Tesla. Everybody's going to end up hating her because she's not being, before at least she was like strong and would have conviction in what she bought. Now when you start selling Tesla, all your Tesla occultists, people start hating you. And then you start buying Coinbase and everybody's losing. Everybody that's bought into any of her funds for the last 3 or 4 months is a loser. Not a loser as a person, but like a loser as like financial investments. 5 years from now, I still think that, you're going to be in gains. I think she's got the right idea, but I think just like anything, there was a Kathy Wood bubble and, it's popping. And I think, people are probably not going to be happy. And a lot of people who are late to the party have only saw losses. So we'll have to see. I'm going to go into commodities over here next. Yes, that's exactly correct, Bubblies. That's why it's so important to compare. Gold, doing exactly what we said, bouncing that key green trend line back at the top of the range, looking bullish. Looks like, we basically broke above key support level. Maybe got the double bottom, but again, I'm not going to get overly bullish on this. This is, the real question is this move right here, that move back up and a slight breakout and then massive bearish continuation to the downside, is this just a throw over? Same signature right here, same signature right here, same signature right here, same signature right here, a break of the range. We really just have to see with gold. But, if this is a concern, if this is going to break out here, see continuation or consolidation and then continuation, there's no rush on this because we're just going to get another massive move, like we did from back here. So, this was August 2018 back here at the bottom. And then we broke through that range in June of 2019. This is when I told everybody I was massively bullish on gold at like 1350. So from that point, how much time went by to that just macro, micro, whatever you want to call it, that top of this current run? I mean, that was months and months and, massive amount of percentages. So from, where I got bullish to the top was, a year. That was basically a year. So, if we've now been consolidating for the better part of a year, and then we see continuation again, I would expect it to last, 1 year, 3 years, 5 years, 10 years. I don't think it's just going to be some quick little like, oh man, I didn't buy today, I missed my chance. But again, I'm not going to get overly bullish on this right now. Fundamentally, very bullish on gold. Technically, still bullish on gold as long as we're above that green trend line. But once again, I want to see a little bit of continuation, consolidation, and, this move up here. Because I think right now, gold is like the FOMO trade, but really silver is the FOMO trade. Silver has looked more bullish throughout this range. It bottomed out at like, basically like the center area of this channel. Slightly lower. I can't really say like the center, but, we're basically at that top descending red trend line again. Once again, we pushed up out of this, and then it failed, came back down. Now we're back out of it again. Are we going to see another massive green candle come in like that? Maybe. But the real range on silver that I got to see it get past is 30 bucks. If it gets past 30, it's going to go straight to 36, and then I think 50 before long. But, you know, am I excited to buy into silver at 26.50 with all-time high premiums because everybody thinks this is it for silver? No, because the truth is, most of the time when everybody thinks one thing, they're wrong. So I think more likely than not, we'd see a big green candle come in, followed by a bunch of red and selling and continuation to the downside. And, you know, we'll have to see. But the truth is derivative markets are very easy to manipulate. So if the bullion banks don't want silver and gold to go to new prices, it's going to be easy to just push it back down. The same way that futures, you know, on derivative like crypto markets do the same thing. That was one of the arguments I keep hearing people say on Bitcoin and crypto is that, well, they can't manipulate crypto the way they do gold and silver, the way they do the dollar, because there's no infinite printing press. There's only 21 million Bitcoin. Well, what about the derivatives market? Are people seriously that dumb? The second there was like futures contracts and derivatives and everything built on top of Bitcoin, the supply is not 21 million anymore. Because if there's a supply of 21 million and only 18 million have been made, or roughly whatever we're at right now, and then on top of that, there's a bunch of like futures contracts and derivatives built on top of Bitcoin, is the supply really 18 million anymore? Or is the supply like infinite based on the amount of derivatives built on top of it? Because it's the same thing with gold and silver. Yeah, there's a limited supply of gold and silver in the world, but there's like, I can't even remember the numbers. I think there's like between 1 and 500 dollars for every actual dollar in value in that market. So that means that there's like 1 to 500, you know, contracts in dollars for every actual like dollar worth of silver or gold that there is. So is there really a limited number of gold and silver? Yeah, physical actual gold and silver, the same way there's a limited number of actual digital Bitcoin, but there's more and more derivatives being built on top of it every day. So what is a derivative? A derivative is a bet. If you and I are going to bet on an asset, you know, there's no actual changing of hands of the underlying asset. So like if you go out and buy a Bitcoin, it helps to push the Bitcoin price up because now there's less Bitcoin on the market. You know, so same way if you sell a Bitcoin, you know, you're creating, you know, a selling event and now there's more Bitcoin in the market. So that affects supply and demand. If you and I just look at Bitcoin and we just say, hey man, let's place $1 trillion bet on Bitcoin. Okay. I'll bet you $1 trillion Bitcoin is higher than it is right now in a year. And you bet me $1 trillion Bitcoin is going to be lower than it is right now in a year. Okay. Does the Bitcoin market cap go up by $1 trillion? No, it doesn't fucking move. The market does not move because nobody bought $1 trillion in Bitcoin or sold $1 trillion in Bitcoin. We made a bet of $1 trillion on the price of Bitcoin. Okay. That's outside the system. And that's what derivative markets are. So everybody is like, oh, there's limited number to get manipulated. Oh, use your brain. You can. If there's once derivatives were built on top of Bitcoin, the whole idea of it goes kaput. Once it was a Wall Street asset, once it was regulated, once it had KYC, once it had anti-money laundering, it's all part of the system now. It's no longer outside the system. So did Bitcoin fail? In a lot of ways, yes. But is it still alive even though it failed? Sure. Does it still derive value? Does it still have a price? Sure. But I mean, are we like people like me? Do I have the same amount of conviction now that it's been corrupted by the system as I did before? No, I think Bitcoin is just another basically like asset that you can quote unquote speculate on. I consider crypto now to be speculative assets, not necessarily investments or stores of value. In the same way that I consider that for like gold derivatives, silver derivatives. You know, if you own physical gold and silver and this whole system collapses, you still own physical gold and silver. If you own a Bitcoin on a hard ledger, you know, and this whole system collapses and then actual Bitcoin still retains its value, it's the same as gold and silver in that sense as the digital version of it. But if you go on PayPal and you buy $1 million, okay, let's use that same example again. We go on PayPal and buy $1 trillion in Bitcoin. What happens? One of two things happens. PayPal either says, okay, we're going to go out and buy $1 trillion worth of Bitcoin, but you just own $1 trillion worth of exposure. You don't own $1 trillion in crypto. You don't own that Bitcoin. The transaction never took place. You gave PayPal $1 trillion to speculate on Bitcoin. They do not have to go out and buy $1 trillion in Bitcoin. They could say, you're wrong. Bitcoin price is going to go down. We're not going to go out and buy $1 trillion in Bitcoin. We're going to wait until it's cheaper and then we'll buy it. So you now have a middleman speculating between you and that actual thing. And it's the same way on a lot of this exposure. Square, PayPal, derivative markets, like they settle in cash. They don't settle in Bitcoin. You don't get, if you buy a futures contract on Bitcoin, you don't get a bunch of Bitcoin at the end of the futures contract. You get the value of that Bitcoin, then you can go out and buy the actual Bitcoin. So that's why like the difference between cash and, physical settled whatever contracts, the majority of people who speculate on silver or gold don't take delivery on that contract in silver or gold. And there's also underwritten into that contract that they can just say, well, we don't actually have the silver, we don't actually have the gold, we'll just give you the value and then you can go buy it. And if the price is actually higher when you go to buy it than it is on what you speculate on what you bet on, well, that's not our fault. Sorry. Should have just went out and bought it instead of betting on it. So that's how you have to look at these things and the importance of this whole derivative market that's been built on top of everything else. If all the derivative markets crash, the underlying assets will maintain their value or be exponentially more valuable because all that money that was in derivative markets will rush into those same assets. All the people that were speculating on top of silver and then all the derivative markets crash, they're like a certain number of those people are going to take a certain number of however much money came out of the speculative like paper markets and they're going to go buy actual physical silver and it'll drive the price up. But in the meantime, to argue that prices are manipulated whenever they're not going the direction you want them, but it's not manipulated when it goes to like when Bitcoin goes to 60,000, there's no manipulation. But if Bitcoin goes down to 50,000, it was manipulated. It's manipulation. People are just idiots. You're just arguing when it does what you want it to do that it's because of price action in markets. But when it does what you don't want it to do, it's because manipulation. So that's my little rant on that. And you know what? While we're talking about it right now, real quick, because again, I'm hearing so many idiots say the same thing over and over again. Crypto and smart contracts are going to eliminate banks. Banks are going to be gone. There's no reason for banks. Everybody's going to transact in crypto. Okay, let's talk about this. So, ways that you could transact in crypto that function. You and I meet up locally somewhere and I buy something from you with crypto and you hand me a physical asset. That 100% is a possibility. And we can shake hands in person and trade stuff. Is that taxed? Yes, 100%. That's bartering cryptocurrency for an asset. We're required to report that for taxes and pay gains on it. As a matter of fact, there used to be a website or localbitcoin.com and a ton of people got arrested on it for basically using it to trade Bitcoin for actual like physical things or whatever exchange because they weren't paying taxes or it was illegal or whatever because you're essentially like money laundering potential whatever. So in all actuality, government does not want that taking place and they definitely want it reported. They're coming after your ass. Okay, second way you can transact in crypto. You could buy like a digital good or trade somebody for crypto. So I can trade on an exchange, even like a decentralized exchange, we can trade crypto through a smart contract. 100%. That totally works. I can trade you some Bitcoin for some Ethereum on Uniswap or Uni or whatever. Or we can do it on an actual regulated exchange. That's fine. Now, what if I want to buy something like, okay, say you go on Amazon and you buy stuff on Amazon and you use crypto to pay with it. They could do whatever they want with the crypto. It doesn't matter. They can save the crypto in a hard wallet. They can convert the crypto instantly into cash or whatever. That's perfectly fine. Amazon is required now to, basically report that sale, etc. And then, the IRS and everybody gets involved and that's fine. And it's up to Amazon now as the other party to take responsibility. And if Amazon scammed a bunch of people and took a bunch of crypto and never sent you your stuff, there would be a bunch of people come out on Amazon and everybody's mad at Amazon and then the regulation would look into them. And, the likelihood of getting scammed is very unlikely because it's Amazon and they have a reputation to uphold, etc. So now what if you and I just meet up on a forum or something, or you see something that I have for sale. I have my own, web page or whatever, and it says, send me 1 Bitcoin and I'll send you, this neat, nifty, like, piece of art or something. And you decide to buy that. And then I don't send you the stuff. There's no smart contract that can enforce that. So now you have to what? You have to reach out to law enforcement and say, I got scammed. I sent this guy my Bitcoin and then he never sent me the stuff. So then you have what? You have like maybe like some emails back and forth or whatever where you talked about it. So you have some kind of paper trail. So you could potentially get a lawyer and try to sue me and come after me for never delivering the goods or whatever. But there's no smart contract. That's what banks do. Banks are the middleman. If you've ever purchased something on a credit card and then afterwards something goes wrong, or you're just a douche and you decide to tell your bank, like, hey, I never got this stuff or whatever. Now the bank steps in and middlemans the transaction and says, look, we're going to temporarily refund that money to your credit card. Then we're going to look into the issue and then we're going to make a final decision. So then they ask like the person who sold it to you, hey, show us like some shipping proof, delivery confirmation or whatever that you sent this item out. Then they go into an investigation, and that's part of what the fees are that you pay to a bank or a credit card or whatever, is to middleman a situation when there's a problem. So if you're using crypto to buy and sell stuff online and there's no middleman, now who's the middleman? Well, you have to try to enforce law enforcement. Like you have to try to go to like the actual police or whatever to get involved. Well, do the police normally get involved? Yeah, if you scam someone, the credit card company can reach out and report you or whatever. But again, they're middleman in the situation and you're paying for that. So if you're going to start asking a decentralized cryptocurrency, whatever, where there's no middleman to get your back, now you're going to go out and you're going to build a case against this person and you're going to go out and start a lawsuit and you're going to sue this person and you're going to do all this stuff. No, you're probably going to have to get a lawyer to do it. So what's the difference between going out and having to pay a lawyer to be your middleman versus having to go and pay a bank to be your middleman? Well, it's probably going to be a lot more stressful. You're going to have to build a case. You're going to have to look into everything. You're going to have to provide all the information, all this other stuff. But in the end, what do you just end up with? Still a middleman. So the whole argument that cryptocurrency is just going to like dethrone all these banks and we're no longer going to need them, like it's absolutely ridiculous because there's still going to be, all it's going to do is open up the world to scams. Because look how many people get scammed now. They send crypto to someone under false pretenses. They get tricked into thinking it's someone in the comments saying, hey man, it's me. You send it to me and I'll send you back 1.5 times as much as you sent to me. People get scammed like that all the time. So the difference is when you have a bank, the bank gets your back if you fuck up. If you lose your account number or whatever, you can go to the bank. They can help you get it back. If you get scammed, the bank can help you get it back. You're paying for that security, okay? In crypto space, if we eliminate the bank, you eliminate the guy who's got your back. Now all the burden's on you. You lose your private keys, you're fucked. There's nobody going to help you get your Bitcoin back. You get scammed because you're an idiot or because there's a new scam you didn't know about, you're fucked. There's nobody to get your back. So now it's up to you to take on that responsibility. So for the argument that crypto is just all of a sudden going to like make all this whole system irrelevant and now it's just going to be some happy-go-lucky world where everybody just gets their way and there's no problems. Well, you're wrong. You're an idiot if you think that. There's definitely some ways that crypto will work, like when you're exchanging crypto for something else crypto or something else that can be involved in a smart contract. But there's no smart contracts between physical goods and, crypto. There's nothing in place right now to enforce that. So the only thing in place now is like laws. So God forbid you get scammed by somebody in a different country that has completely different laws. You're totally screwed. They're never going to find this person. They're never going to care or go after this person. So, I mean, the real question is something going to fill that gap? Is there going to one day be a smart contract that's smart enough to figure out like tracking numbers or whatever? And then there's just going to be a new scam on that because then people are going to say, well, I mailed it to him. Here's a tracking number. And then you're going to look at it and say, yep, what? Smart contract says he provided a tracking number and it says that it showed up. So we're releasing the crypto to him now. And the smart contract is done. It's been resolved. No third party. Boom, we're good. So then people would just mail you a empty package and there's nothing inside of it. And then who do you go to? Back to law enforcement. So this is a lot more complicated than people think. So while I'm bullish on crypto, and I definitely think there's a future in blockchain technology, cryptocurrency, whatever, it's the wave of the future, etc. Does that mean that it can't just crash tomorrow and that you're just early? Yeah, if you were early and you're way in profits now, you're definitely early and you're profitable and you're good. But does that mean that you're not early to the next big wave and that all of a sudden this didn't just blow up into some big bubble and it crashes down? Well, Amazon went down like 90 something percent from like the top of the tech bubble. Everybody that held Amazon through that crash is still massively in profit right now. But it doesn't mean they didn't just crash 90% in between. So, there's definitely an argument in both directions. And people are like, this market is way ahead of itself. That's all I'm going to say. I'm going to leave it at that. The market is way ahead of itself because nothing is like, there's very little actually being built that solves real problems. And that needs to happen in order for crypto to legitimate, in order for Bitcoin to be worth $60,000, some things need to change, in my opinion. So here is XAU to XAG chart, gold to silver, broke out, finding support at that key Fibonacci level. I still expect this to burst back to the upside. Gold to go up in relation to silver, which means that gold's going up fast, silver's going up less fast, gold is going down, silver is going down faster, or gold is going up and silver is going down. That would basically be like an internal retracement of this descending wedge that we've been inside of. Is it possible we go lower first? For sure. If we break back down below this key red trend line, I will be bearish on this and admit that I'm wrong. But right now, I'm definitely seeing a couple things that are telling me, including like some bullish divergence, that we're going to get continuation to the upside. Platinum still looks good. Did it bottom right here? Maybe. I'm not sure yet. I still would have rather see this pullback last somewhere closer to like this pullback right here. But, could we get a massive red candle come in and then that's the bottom and we continue? For sure. Or could we just start floating back up here and get a new high? Definitely for sure as well. I still think that this thing is more like, it's at $1,200 now. Gold's at, 17, 1800 now. So I still think this has got a 50% move as it comes back into line with like a 1-to-1 ratio between platinum and gold, which is historically what you're looking at. Copper futures, this is on the weekly, got bullish back here, massively bullish, new all-time high on the weekly, massively bullish on copper for the future for the next 3, 5, 10, 20 years. Copper and cannabis stocks and uranium are probably going to be the trades of the century. UEC, Uranium Energy Core, this is just a miner for uranium. Same thing as going on in every other market. We got a sell-off, coming back up, retesting resistance. I still think we have continuation to the downside. I'm not shorting this. I'm not selling positions right now. I obviously told you guys when I was selling up in, I believe it was 340 range up in here. Sold some of my position. I still think we pull back lower, but massively bullish on this long run, long term. URA, this is a uranium ETF. Same thing again. About to get across 821 to the downside. I expect further downside movement on this, but we could very easily just move up high. I was warning you guys about the bearish divergence. 1, 2, 3 drives are bearish. 1, 2, 3 drives are bearish. I expect a sell-off. Where that sell-off takes us, I'm not sure. Probably $17 or lower. Cameco, CCJ, got massively bullish back here on the daily. Same thing, uranium miner. I expect more of a sell-off here. Is this the bottom, potentially? More than likely, though, I see this as, maybe like a head and shoulders pattern kind of playing out right here. The symmetry is not great on it, but we're back down at like the neckline. If we break down from there, I would expect like a retouch of the 200 exponential or simple moving average. Very likely could see a pullback of like 1350, back to 1350. AG, First Majestic, it's going to do whatever silver and gold do, obviously. We got the hard sell here. We're trying to move up, but, we basically have a high, a low, a high, same low, a lower high, lower low, and now we're coming up here. We're slightly took out this previous high, but, really this thing's got to go back above $20 before it can start looking legitimately bullish. But, we hit our buy zone. I honestly like to pick up more of this at a lower price. Is that going to happen? Not necessarily. I really want to see on the long-term chart come back down and test this purple trend line. But if it doesn't, is this close enough? Was that close enough to retesting? Yeah, that's close enough for me. If we start seeing like continuation and strength, over the next like couple days or weeks in silver, gold, miners, etc., I'm going to get massively bullish on these things. USAS, this American Gold and Silver Corporation, again, mining stock, showing less strength, has not broken out of this descending trend line, definitely has not broken out of this descending trend line. It's been in a downtrend since August of 2020 last year. continually putting in lower lows. We hit my buy zone here. I bought some. I'd like to get more at a lower price, potentially down at like $1.67, but anywhere around $2 is good to me. I'm not going in heavy right here, but if we start seeing continuation and strength in spot markets in this as well, I'm not going to not get bullish. I'll tell you that much, which means I am. I'm going to do SILJ. This is a ETF of the junior miners. We're breaking out here again. It's exactly what I talked about, though. We had a breakout fail right here, a massive breakout fail right here, massive breakout fail right here. So I want to see how this looks on the weekly. I want to see it close outside this range on the weekly, and then I want to see it come down and, consolidate above the breakout. Because on the daily, you could have easily gotten faked out on this thing. But on the weekly, you would have been fine because you would have seen a gap up, massive sell-off, a gap up, massive sell-off, a massive rejection, and then here we have basically a close at resistance, moving up. So where does this close this week? I would rather just wait 2 days and see. If we close above this, I would be bullish on this because we would basically be closing, opening, and then closing again above a key resistance, in which case we would probably be getting a hard buy signal right here, potentially moving up here. Everything would look good. But right now, it's just, in my opinion, I'd rather just wait a couple of days because this market, if we're going to see bullishness out of this market, it's going to be hundreds of percentages and it's going to last for years. So if you're 1 or 2 days late to the party and lose a couple percent, it's better, in my opinion. Bullish engulfing candle on Caterpillar, CAT. I'm still massively bullish on this, obviously, but we did have bearish divergence. Got to wait and see how that plays out. Starting to just consolidate here. I would expect this to show strength over time, but we could easily see a sell-off. Pot stocks. We saw a little bit of selling coming in. I told you guys I'm starting to dabble in this. I'm dipping my toes back in these as they're potentially getting into like my bottoming region. Obviously, I've been talking about it for weeks. We hit my target. We hit my trade setup. I am buying, but I'm not just going all in right now. I want to see some strength coming out of this. Tilray, obviously, one of the stronger ones in the space and more bullish in the space, but we could easily see a signature like this where it starts to move up and then just puts in another lower high and then another lower low as well. ACB, one of the weaker in the space, definitely starting to look like that right shoulder could potentially be playing out here. Again, starting to dabble in this. We got the buy, we got the sell, we got the buy at the bottom of the range. That is our divergence signal. Once again, bullish divergence potential that we're going to get a powerful move up here. But this one's under the 200 exponential and simple. Definitely more weak. CCG, Canopy Growth, more in line with like Tilray. About to get the hard buy here. We're hitting a new low. We're at the 200 exponential and simple. Once again, I'm dabbling in this. I'm not ready to go like hardcore bullish yet on it, but definitely starting to see some potential as it is showing strength. The whole space is really. All the ETFs are as well, like THCX. Any of the ETFs you look at. So Lemonade, still looks like crap. Broke down from a key resistance point, selling off. Finally got a little bit of what I would consider a dead cat bounce at a low, a lower low. Three stabs lower with a low right here, a higher low, and a higher low. This to me, this bullish divergence after a massive sell-off, I would expect some kind of bounce into this. Probably a retest of the breakdown. So could Lemonade now head back up to like $115? Yeah, it definitely looks like it. 3 drives of bearish or a bullish divergence, but we did break down from key resistance. So I would not get overly bullish on this thing quite yet, or I'm not getting bullish on it quite yet, but there's definitely some potential there. I'm probably never going to get overly bullish on Lemonade just because, I'm not convinced that the idea is good. I'm not convinced that it's the future of insurance. People like to have insurance agents and stuff like that. It's not like a travel agent. And even then, people miss, there's still a lot of people that pay a premium to have a travel agent to deal with shit when it goes wrong versus having nobody to call. And like, that's the argument against like decentralized stuff. All right, well, I think we're going to cut it short here today. Flew through everything in about, an hour and 40 minutes. Solid, kept it under 2 hours. Looked at our commodities, looked at our tech sector, looked at our cryptos, indexes, everything we needed to look at. We saw a little bit of life out of some of these markets today, but again, I am not ready to get overly bullish on anything at this point in time. There's a lot of stuff pointing to the downside in basically everywhere. Everywhere. Everything is pointing to the downside in like every market right now. There are very few things that look bullish going on right now. So the real question is, does the dollar bottom out here and do 10-year treasuries, go sideways a little longer, and then we start to see strength out of them? Because if the 10-year treasury starts strengthening, if the dollar starts strengthening, I think we're going to see everything else get wrecked. But, I spoke specifically about crypto showing weakness and then it translating into the stock market on Sunday night. And we saw that over the last 3 days, 2.5 days. We saw more selling in the stock market. There was told to us ahead of time. The premonition was Bitcoin starts selling off and then everything else gets crushed too. And that's what's been happening. So we have to see, is this going to continue on? Are we going to see gold and silver continue to strengthen? Are we going to see the dollar and the 10-year start to strengthen again? And then everything else going to sell off? Are we going to see mixed markets? Are we going to see chop? Are we going to see, massive bullishness everywhere? Yet to be determined. But right now, there's a lot of warning signs in a lot of markets. A lot of things pointing to the downside. A couple things pointing to the upside. But again, after this much time, it's better safe than sorry, in my opinion. Number one priority, protect your capital, protect your principal, be smart, pay off high interest debt, and, diversify your portfolio. Take profits into things you're massively up in and invest in things that that are undervalued. I always like to buy stuff cheap. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. These are some of my specific mantras. Buy stuff when it's cheap, sell it when it's expensive, or buy into a trend. You can buy it when it's already expensive, sell it when it's more expensive. But when you're at the top of parabolic bubbles after months and months and months, and we're running out of, bullish fundamentals and technicals are not looking bullish anymore, and running out of volume, running out of buyers, running out of fake reasons to be bullish, and all of a sudden you start kind of coming back to and thinking, wait a minute, did I get a little ahead of myself? I feel like that's the way the markets are looking right now. They're like, hang on, did we get a little ahead of ourselves? Did we get a little excited? Are things back to normal? Are things going to be back to normal? We saw record quote unquote savings in the United States, throughout the pandemic. And now we're seeing once again record levels of debt, credit card debt, etc. So eventually, I think the record savings are just money people didn't have to pay for stuff that they've been paying for, like rent and, student loans and all these other things that they had moratoriums on. So you could say the record savings are just because people didn't have to pay bills that they're still going to have to pay. So what is the record credit card debt? Well, it just means people are getting more and more and more overexpended. So if all of a sudden you have all these bubbles and all these moratoriums and all this stuff, and all of a sudden they pop, it's going to be wreck city in this bitch. And I think more than likely we're going to get that double dip. We're going to get that massive recession, depression, and we're going to end up in much worse shape than we ever were to begin with. And, the real question is can the Fed, can the Treasury, can they save us? Because the truth is, all they're doing is all the wrong stuff. They had a million times where they could have raised interest rates prior to this happening, and instead we entered into a tough situation with nothing left, with no ability to do anything. So now we're just pumping out dollars, pumping out currency all over the world to try to fill the gap in a sinking ship. And the problem is, you can only jam so many dollars into the hole to plug it before eventually the ship sinks anyway. Because reality, what's happening right now, the ship is sinking. We're taking on massive amounts of water. Everybody's plugging up all these holes everywhere. But are people starting to realize, hang on, we're in a boat that's floating on top of water in the middle of the ocean, and all of a sudden the water's up to my knees. Is this boat still sinking? Is this ship still going to go over? Under? People start looking for life rafts. And the real life raft, people looked at crypto months ago as the life raft, and we saw this parabolic move up. But, are people now going to be looking to, more traditional life rafts, like gold and silver? They're, to me, right now, the biggest undervalued assets. So if we start to see a burst in gold and silver, if we start to see the treasury yields, consolidating or going back up again, if we start to see, some of these signs that's going to tell me that there's a good possibility that some of these other correlated assets, you could argue crypto is not a correlated asset. I would argue that you're an idiot. I think that Bitcoin is more correlated than it's ever been with traditional markets. And to tell you the truth, if one or both of them start selling off, I guarantee you they're both going to get wrecked by exponential percentages. And, we're seeing basically the total market cap looks like it's potentially topping out in crypto. Bitcoin dominance looks like it's potentially bottoming out in crypto. We have to see what happens. But, I think we're very close to the top, at least temporarily in some of these markets. So. But yeah, I think I'm going to call it there, guys. Appreciate everybody that tuned in today. Good to see you all. Appreciate the likes. Appreciate the support. Definitely, what you asked there is, do you think FTM can have another bounce up to 50 cents before the drop? Hang on. But yeah, I mean, I think a lot of people right now are delusional. People have drank the Kool-Aid for like way too long. And you got to be real, real careful. Real, real careful. I mean, definitely time to be locking in some gains on some of these assets. Man, it doesn't look strong right now. Does not look strong right now. You really got to see some kind of strength come back in on FTM, Phantom. And right now, it's just not happening. It doesn't mean that it can't happen, but you're retesting key levels. You're basically at like the bottom, close to the bottom of the range, putting in lower highs. You could argue that it's just a consolidation reset, bullish reset before continuation. But what is Phantom going to do? It's going to do whatever Bitcoin and the rest of crypto markets do. It's not going to just start going parabolic while Bitcoin sells off, in my opinion. It's the smaller market cap stuff and the cheaper price stuff, the more people are speculating on it. So, if it's new, if it's cheap, if it's gone up a massive amount of percentages, you're more at risk, in my opinion. Hey, good to see you, Commander Corn. Yeah, definitely check out the first half. Lots of good stuff in there, and a couple like nice little useful rants as well. So, but that's it for today, guys. Crypto Trend Trader. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Pay attention right now because we are at key pivot points in a lot of these markets, and don't want to lose all that wealth that you have accumulated. Remember, profits are not real until they're realized. Log those gains. Go out, buy what you need, pay off those debts. Make sure that you're squared up. Just in case, because you don't want to look back and be kicking yourself. So, but again, not financial advice, not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Crypto Trend Trader.